2008 and 2009 beginning were really bad for the financial services industry. In India, I think we weathered the storm much better than what we've seen in the West. How have you weathered this whole situation, especially on the asset management side, where mutual funds have really taken the brunt of it? Of course, this quarter looking good. Financial services, your perspective going forward?
See, I think the opportunity in India is really a big opportunity, Damini. I think if you step back and look at the basic structure for financial services in India, I think you look at the population of India, I think it has one of the largest potential markets for financial services, retail financial services. I think we have one of the fastest growing economies in the world. We have savings rate which are high and which continue to look high. And to top it all, we have penetration of most financial services products, be it mutual funds, equities or insurance, which are really quite low. So I think if you look at this combination put together, I think you'd have to say that the opportunity for financial services as a whole is really quite large. And that's the way we look at it. So, whether there are short-term blips or short-term issues in the market, you've got to step back and kind of look at the bigger opportunity and bigger picture and see how you can capitalize on that.
Ajay, now you look at the entire financial services gamut, but let's just step down into that and let's first come to the asset management business that you look at. Now, why in India do we see that penetration is only at 5% of savings within the country? And you see that in the US, you have 1 out of every 2 households, as you told me, is the penetration of mutual funds. Why is it taking so long? Because mutual funds have been around for a long time. Is it that the investors don't trust it, or that they're just not aware about it, or there's just not enough money to go into the funds?
No, I think if you take the US, for example, or you take the UK, the big growth in mutual fund as a sector really came about with the 401k plan in the US, for instance, or with the introduction of the PEP, which is again a tax advantage plan in the UK. So the tax regulation played a big role in terms of the rapid growth of the mutual fund sector in these two markets. I think in the case of India, my sense is that there's a lot that needs to be done in terms of just empowering investors, educating investors in terms of what mutual funds can do. There's a sense that mutual funds are only equity funds, for instance, whereas if you look at it, there's a complete range of products available under the mutual fund umbrella that can cater to almost any investment need for anybody, whether it's short-term surpluses, medium-term requirements. If you have slightly lower risk, you have a product for that, or you can go into the more high-risk equity funds that you may choose. So I think the product range is pretty good. I think distribution and empowering the investors is really where the work needs to be done.
Now, coming to the Birla Group funds table, 5th largest in the country, where do you see that market share going, and how do you see that market share increasing? What would your strategy be?
See, I think there are 5 broad drivers for a business like this. The first tends to be brand, because in a product like this, trust is a very important factor. Trust is a thing that the investor makes his decision on. Typically, we find in India, the offerer is more important than the offering. So the investor is looking at many times, and I'm not talking about the more savvy investor, but on a mass scale, at the offerer rather than just the offering. So the brand and what the brand stands for tends to be one big important factor. The second important factor tends to be distribution. And when I talk about distribution, I'm talking about the breadth of distribution and the efficiency of distribution. And typically, what kind of relationship do you build? Because it's an intermediated product. So we're distributing through third parties. What kind of relationship and support can we provide for distribution? So that tends to be typically the second type of strategy. The third strategy is around product. It's around making sure you have products that complete the entire spectrum that you need to have and that meet all the needs of the target customers that you're looking to address. The fourth pillar tends to be around operations and customer service, because if you're building a retail fund base, if you've got distribution, you've got products, you need to make sure you've got the operations platform and the customer service to back all of that up. And all of this is worthless unless you have the right people. So the fifth strategy typically tends to be around people. So I think any strategy in this sector and any differential growth that you're talking about really is a function of how these 5 play out together.
And it's interesting you talk about the brand, because if you look within that space, Reliance, of course, is top of the league tables with really over 100,000 crores assets under management. What is it that at Birla Nuvo, with the Birla Sun Life group of products, you could do differently to actually hasten that move up the ladder for market share?
Well, as I said, I think there are the five levers that we have to pull. I think on the brand side, the Birla brand.
So you're satisfied where you are at this point of time, because right now you would have, of course, UTI has a legacy, to fall back on. You would have an ICICI Prudential, you would have HDFC as good product offerings. Birla is also a good product offering, but just competitively and comparatively, you'd be happy where you are. Nothing different to be done to be more aggressive.
No, I think we've got a good strategy, and I think we're quite comfortable with our positioning in terms of where we stand in these 5 pillars. And I think it's a question of making sure that these continue to work and we continue to build long-term sustainable business.
Okay, now one question on exchange traded funds. If you look at overseas markets, you see that over 50% of the money that's invested in mutual funds goes into these exchange traded funds. Typically, they're like index funds. They just, there is no fund manager intelligence going into it. They're just mimicking an index. But in India, that space hasn't grown at all. What's holding it back? Why is it not yet taken off in India?
See, I think the ETF market is a market that really caters to, at one end, the more, the large institutional players who find it an easy way to access markets at low cost because they have large funds of money, large pools of money. It's an easy way to get exposure to a market up front. And I think to the more sophisticated high-end investor who again looks for pure market exposure, I think for the mass retail investor, I think the active fund manager has done reasonably well across most of the markets in Asia, at least that I'm aware of, and therefore continues to be a port of call for the retail investors. So the mutual fund, the actively managed mutual fund, continues to be a place of demand, therefore, for the retail investor.
Right. Within the performance of Indian mutual funds, there's a big variance between, even if you're looking at equity diversified funds, if you look at the performance, there would be 20 to 30% difference between the worst performer and the top performer. So sitting here as an individual investor, if I'm looking, there's two strategies for me. I go there and research those mutual funds, and I can just go and pick up equities as well. The risk, do you think, is the same in both, or it's less for the mutual funds?
Well, obviously the risk is less simply because of the diversification you get from an equity mutual fund. Typically you'd get 30, 40, 50 underlying securities, which would obviously give you a diversification benefit which you wouldn't get if you went directly into markets. And of course then there's the coming in and coming out of markets and the cost of doing that, which you don't get in a mutual fund because professional fund managers have a way of dealing with that.
Now coming to the life insurance business, and that's something that everybody has been looking at. It's a very, very interesting space, but if you look at numbers coming out for the month of May, actually a year-on-year decline in premiums that have been collected. So is this still some time away before the life insurance sector comes out of the woods because of the financial slowdown that we've seen?
Yeah, I think the insurance industry slowed down last year. For the first year, I think since the private sector came in, the industry actually had seen some decline. I think a little bit of that decline you've seen in April and May, but I'm pretty sure that you will see the market and the industry kind of picking up towards the rest of the year. It's early days still. April, May is still early in the financial year, and typically the first quarter tends to be a slow quarter for life insurance. So I think you will see this industry picking up over time.
But you can see LIC still holding forth out there. While you see private players seeing decline in premiums, LIC still seems to be managing to show month-on-month growth figures.
Well, LIC is a strong brand. They have strong products. They have a very strong distribution network. So, I'm sure that they will continue to do well.
Well, I think the Birla stable has an 9% market share in the life insurance business. Where do you see this number going? Would you like it to go much higher? And really, what kind of investment would you have to support to make that market share higher?
See, we've said we want to be a leader in the businesses in which we operate. Life insurance is no different. And I think, therefore, we believe that using the five pillars that I talked about earlier, the 5 levers of brand, of distribution of product, of operations, customer service and people, that we will have to make our, develop our strategy to grow the business. I think we have 2 very supporting shareholders, and therefore capital has never been an issue or a constraint for us. And we believe we've got support for the business plans we have in place.
Sure. And there were numbers that have been put in, 1,000 crores needed for at least a few years going into it. It's a capital intensive business, insurance. And we have also heard about other companies that are in the business that are thinking of IPOing in this market. Would that also be an avenue? Would that be one way of funding? I think
there are obviously different avenues to fund growth, and I think this is a capital intensive business largely because of the nature of the products. The nature of the products are such that you have an initial business strain, which is you have to put some money up front in order to get the business onto your books, and you recover that money over the course of the life of the product. That's what really causes the capital intensity of the business. But as I said, I think there are different ways to fund the business, and people will choose what suits them best.
Well, we all know that this is a business that takes a long time to recover the money. You have to be in there for the long haul. When do you see Birla Nuvo insurance venture actually being cash break even and showing profits?
See, I think the whole break-even profile and the cash profile for a life insurance company is very much a function of the growth of the business, because as you put on new business, as I just explained, as you put on new business, you have what's called this new business strain, which causes the statutory loss in your books. So the faster you grow, the more new business you put onto your books, the bigger that strain. So one way to get to profitability earlier actually is to slow down growth. Because the minute you slow down growth and you get an existing book size which is reasonable size, you will start seeing the business look more profitable. Because our existing book is obviously profitable. It's the new business that we're writing that is causing the new business strain. So I think the answer to your question is really when we see growth starting to slow down, when we see that the opportunity is not as big as in new business as it is in our existing business, that's when you'll start seeing the existing book of business will start generating more money than the new business strain, which is when you will turn profitable.
So is that saying that till a couple of years down the line?
I think so. I think we see a lot of growth. As I said, I think there's a lot of opportunity for growth still in the market. Penetration is low. We are still at the tip of the iceberg in many ways in terms of products like this. So I think it will probably be that time.
How key is distribution in both in the funds management business and in the life insurance business? Because quite often there is this perception among people that the product really doesn't matter as much as the fact that whether you have that man on the ground who can go literally door to door and make sure that the person in the house actually goes ahead and buys that product. So would it be performance versus distribution? It's almost a case of choosing one?
I don't think that's the case. I think any product you sell has to perform, and I think this business in this sector is no different. The products that you sell have to meet the promise of the product that you've sold.
But would that just be 10% of the story?
I don't think so. I don't know, I can't put a percentage to it, but my guess is that performance is very important.